Hi guys, I hope you all are doing great. I hope your preparations for your CMA foundation exams are going very well. Today I'll be discussing with you the MCQ bank that is published by your institute, and we will be discussing all the questions given in this MCQ bank so that you will be able to answer the questions in your examination, right? So let's target this one. Do it very nicely and score good marks in your examination. So we are on to economics, fundamentals of business economics and management, your paper number 4. Okay, right. So the first question is, who was the father of economics? I think you can all give the correct answer over here. Yes, that's right. Option number 2, that is Adam Smith over here. Then, normative economic theory deals with what? What to produce, how to produce, whom to produce, or how the problem should be resolved. So, normative economic theory talks about how the problem should be resolved. In economics, goods include material things which A can be transferred, can be visible. Both A and B and none. What do you think is the correct option over here? Yes, that's correct. Both A and B. Now, nature of PPF curve is, what is it? Convex to origin, concave to origin, both or none? I think you know the answer. Yes, that's correct. Concave to the origin. Point elasticity was propounded by point elasticity, Marshall. Very good. Luxury goods have dash degree of elasticity, high, low, moderate, or none. Yes, that's right. High is the correct one. So along with me discussing these things, you have to guess also. And this is going to be a little fast so that we can cover all things very nicely in a short span of time, and you can revise this before your examination. Dash is the fundamental relationship between physical inputs, that is factors of production, and physical output. So the goods are going in and coming out. The output is coming out. That is quantity of goods, service produced. So that is what? Input output function, demand supply function, or production function, or cost function. Yes, that's correct. That talks about your production function. At the point of inflection, TP will be generally, so what is going to be? Shows increasing trend, shows decreasing trend, decreasing or increasing trends, equal to 0 or be negative. Yes, you guessed it right, that at the point of inflation, TP will generally show increasing or decreasing trends. Correct? That's option number 2 over here. Identify the correct statement. So you have to read all the statements and see which one is correct. You have to see the most appropriate one. Okay. Average product is at its maximum when marginal product is equal to average product. Do you think this one is correct? Okay, let's see more options. Law of increasing return to scale relates to the effect of changes in the factor proportions. Economies of scale arise only because of invisibilities of factor proportions. And the last one is internal economies on scale can occur only to the exporting sector. So what do you think is correct? Yes, the first statement one which we read, and we took a pause over there. Average product is at its maximum when marginal product is equal to average product. Okay, correct. Modes of production was propounded by. Now, which a person propounded the modes of production? You have to read question very carefully. That was Karl Marx, correct. Which of the following is not a factor in market supply of a product? What is not a factor? What is not going to affect the market supply of a product? Cost of production, number of buyers, market price of the product, or price of related products. So price of related products will affect, market price of the product which we are selling will affect, and cost of production also. Number of buyers is not a factor in market supply of a product. Okay, so that's option number 2. Correct. The demand for salt is inelastic because, why is demand of salt inelastic? Because there's no substitute. What are you going to put in your food? Right? No substitutes. You can't replace it with anything. Also, you say rock salt, etc., and all these are things, but salt is only the type, na? The variations will be there, but salt is irreplaceable. No substitutes at all. Price elasticity demand of product will be more elastic if it is, yes, tell me, of has no substitutes, has number of substitutes, or is an item of necessity, or is life saving. Elasticity of demand will be more elastic if, yes, has number of substitutes. Correct. So as the number of substitutes will be there, the price will be more elastic. Correct. Option number 2. All factor of production become variable in medium run, short run, in which run, long run, or none of the above. Yes, you guessed it right, long run. So I hope you people are having this PDF and you have got the printout of it and you are solving it along with me. Also, you can comment down in the comment section and we will be seeing at how many right you are guessing and are you in sync with us. Okay. What is the maximum point of TP? Yes, tell me. Well, the first option given is when AP becomes 0, average product becomes 0, when MP, marginal price, becomes 0 at the intersecting point of AP and MP, or none of this. Yes, what do you think is the correct one? Yes, that's correct. When MP becomes 0. Okay, sorry, I'll have to switch. 1 second. Yeah, when MP becomes 0. I don't know what's wrong. Yes. Are we good now? No, it's moving ahead. 1 second. Yes, when MP becomes 0. Okay, let me scroll a little. Next question. A rational producer will operate in stage 1, stage 2, stage 3, or all of the above. Yes, that's correct. Option number 2, that is stage 2. Capitalistic economy means where the wealth and income of country are owned by state, landowners, state and public, or your bourgeoisies. So what do you think is the correct answer? Yes, bourgeoisies is the correct answer. In the primitive age, the factors used in production were mainly capital, land, labor, both land and labor. Yes, in the initial primitive age of factors, both land and labor are there. Okay, they were mainly used because capital was something which was coming and going. In PPF, if PPF is linear, it implies what? What? Constant opportunity cost, diminishing part cost, increasing opportunity cost, or none? Yes, that's correct. Constant opportunity cost. PPF is linear. Na? Your opportunity curve is linear. It implies that there is constant opportunity cost being incurred. Microeconomic theory deals with economy as a whole, individual units, economic growth, all of the above. So you have to see micro, small things, individual units. Okay. Now, human wants are limited, unlimited, undefined, or none. You know it right. We all have unlimited demands, unlimited wants. Any point beyond PPF is attainable, unattainable, both or none. Any point beyond the PPF, no, you can't attain it now. That is unattainable. Okay. If an economy is working at the point left to PPF curve that shows full employment, unemployment, excess production or none. Remember your PPF curve, point left. If economy is working at the point left to the PPF, so it is going to be unemployment. Very good. Yeah. So that was around 23 questions that we covered. Let's move ahead. Now, if the price of a burger rises from 12 per piece to 20 per piece as a result of which the daily sales decreases from 300 to 200 pieces per day, the price elasticity of demand can be estimated as. Yes, take your time, solve this and comment down in the section. Okay, and then we will be going ahead with this. I'll give you around 5 to 10 seconds, 15 seconds. Yeah, 15 seconds is good. So I hope you got the answer for this one, question number 24. Yes. So price elasticity will be calculated as percentage change in demand upon your percentage change in price. Right. So that is 100 upon 300 divided by 8 rupees has been changed. Okay. So, and the original price was 12. 100 was the quantity change. It has decreased by 100 and earlier it was 300. So it goes around 0.33 something and this will be 0.66667. So that will result into 0.5. So our option number 1 is correct over here, 0.5. I hope you all have also got the same answer for this one, right? Great. Now let's go ahead. An increase an increase in price will result in a increase in total revenue if percentage change in quantity demanded is greater than percentage changed in price, or percentage change in quantity demanded is less than percentage change in price. Percentage change in quantity demanded is less than percentage change in price, or the third option is percentage change in quantity demanded is equal to percentage change in price. So what do you think is the correct answer? Yes, you saw it right. Percentage change in quantity demanded is less than the percentage change in price. Then only an increase in price will result in total revenue increase. Okay, I hope you got this. Now, which of this will have highly inelastic demand? You have to see which of this is highly inelastic. So we know it very well that perishable goods have highly inelastic supply. Okay, the supply function of a product X is as Sx is equals to 5px plus 3, where px stands for price. The quantity supplied corresponding to the price of 2 will be. Now tell me what should be the correct answer here. Take your time, take 15 seconds again and calculate it. Okay. Yeah, solve it. Yes, so I hope you have guessed it right. Yes, that's a simple thing. S of x is equals to 5 into 2, you will put and 3. 10 plus 3 is equals to 13. Very good. Yes, option number 2. Now, variable factor means those factors of production which can be only changed in long run, which can be changed in short run, which can never be changed, or both A and B are correct. So tell me what is it? Yes, it can change in the long run and short run. So if both are correct, that means your option number 4 is correct over here. Okay. If the marginal product of labor is below the average product of labor, it must be true that marginal product of labor is negative, or the marginal product of labor is 0, or the marginal product of labor is falling, or the average product of labor is negative 26. So what do you think is the correct answer? Yes, the marginal product of labor is falling. That is option number 3. Why does the law of increasing returns operate? Why does it operate? Tell me. Full use of fixed invisible factors, efficiency of variable products, need to reach the right combination. Yes, due to all these purposes, the law of increasing returns operates. Internal economies and diseconomies arise due to overall industry level changes, changes at the firm level, both A and B, neither A or B. Yes, what is it? Yeah, what they've said, internal means your firm level, changes at the firm level. Labor surplus is the difference between value of output minus what? Value of your materials used, value of fixed land used, or value of capital used, or none. Yes, value of material used. Labor surplus is the difference between value of output minus your material use. Yes, 1 second, let me scroll it. So, socialistic nature of economic means what? Income and wealth are owned by capitalist, income or wealth are owned by labor class, or income and wealth are owned by state or public. All. What is it? Socialistic nature. That means it's owned by state and public, both, blend of both. Which of the following is are an essential features of the market? Buyers, sellers, price, all of the above. Yes, you guessed it right. All the three are essential factors. In the long run, price is governed by what? Cost of production, demand, supply, forces, marginal utility, or none. You guessed it right. In the long run, how you're at what cost you're producing, that will affect your long run price, because then you can also decrease your price now when the production cost of production is getting low now, and you can have reached at the experience level and everything. That time you can charge a lesser price also. So cost of production is the correct answer. In the long run, a firm is in perfect competition earns what? Normal profit, abnormal profit, average profit of past 5 years, or 12.33% of the capital employed. Yes, it will only earn the normal profits. Okay, that's option number 1. I hope you are understanding, you're getting these things, you are able to recall and solve these MCQs. A firm faces the shutdown situation when price is less than average variable cost, price is more than average variable cost, price is equal to fixed cost, or price is more than the average fixed cost. Yes, correct. Price is less than average variable cost. You are not able to recover that much also. Right? A firm that makes profit in excess of normal profit is earning economic profit, costing profit, normal profit, or supernormal profit. Yes, more than normal profit they are earning, that means your supernormal profit, option number D. The market state that satisfy all the essential features of a perfect competitive market except identity of product is known as what? Oligopoly, duopoly, monopoly, or monopolistic competition. Yes, correct. Monopolistic competition. Yes. So we have covered around 39 questions of yours. 1 or 2 also if they ask from here, you are good to go. In the short run, if the price is above the average total cost in a monopolistic competitive market, the firm makes profits and new firms join the market. Profit and the bar entry to new firms, makes losses and exit the market, or quick profit and disappears. Yes, it's correct. Option number one, profit and new firms join the market. In the short run, if the price is above the average total cost in a monopolistic competitive market, everyone can enter now. So new firms join the market. Which of these is associated with a monopolistic competitive market? Product differentiation, homogeneous products, or normal in short run, or single buyer? Correct, product differentiation. Okay. In a competitive market, dash is the price maker. Firm, industry, consumer, or trader. Tell me. In a competitive market, your industry will be controlling. They are the price makers. A monopoly demand curve is same as it is average revenue curve, same as its supply curve, same as marginal cost curve, or none of these. Tell me. Yes, it is same as its average revenue curve, option number one. When the firm is in the long period equilibrium, it gets only what? Normal profit, no loss, no profit. Then you have your supernormal profits or loss. Yes, when it's in the long period equilibrium equivalent to your cost and everything. So it is going to earn only normal profit. Equilibrium of the firm under perfect market makes when MR curve cuts the MC curve from below, or your marginal curve cuts the marginal revenue curve from below. Or the third option that they have given is marginal cost curve and marginal revenue curve are parallel to each other, and the last option that they have given is average revenue curve is equivalent to marginal cost curve. Yes, think over it and tell me what should be the correct answer. Yes, cost curve cuts the marginal revenue curve from below. That time equilibrium of the firm under the that is the situation of equilibrium of the firm under perfect market. Okay. Yes. Penetration pricing means what? Price will be reduced after gaining the market, reduce price when losing market share, or price will be raised later after gaining market share, or they have given the option none of these. Yes, what do we think? Yes, price will reduced. Sorry, price will be raised after gaining market share. That's option number three. Now, one of the examples of oligopoly market is oligopoly market. Remember all those. Example: cosmetic industry, cartel, automobile, or technology. What do you think is the example of this industry? Yes, we are waiting for your answer. Yes, that is correct. Automobile industry. It is an oligopoly market. The forces of supply and demand determine what? Your quantity of the goods, price of the goods, different prices from different customers, or demand for customers. Yes, tell me what do you think is the correct answer over here? It will determine the price of goods, option number two. Excess profit earned by each firm during the short time would attract new firms to enter into market. Market share of each firm will be less. There is no barrier to entry in the market, or all of the above. Yes, what do you think? It is all of the above. New firms are going to enter, market share of each firm will be less, and there is no barrier to entry also, no? So that is all of the above. Okay. Now, in monopoly market, there is a single firm, single product, single firm, many substitute identical products, a single product, many firm, or none of the above. Monopoly, when it comes to mind, single firm, single product. Very good. Yes, let's go ahead. Now, the concept of monopolistic competition market was introduced by Alfred Marshall, Professor Chamberlain, Karl Marx, or John Ripson. Tell me, who introduced this concept to us? Yes, that's correct, Professor Chamberlain. Which of the following is near money? Bill of exchange, saving bonds, gilt-edged securities, or all the three? Correct? All the three are the correct option over here. Right? That's option number 4 for you. Now, which of the following is, I read the same thing. Optional money is a legal tender money, non-legal tender money, limited legal tender, or full body money. So, optional money is what? Yes, tell me. Take your time. Think over it. Yes, that is non-legal tender money, optional money, non-legal. Which of the following function does money serve when used to measure the prices of different goods and services? Store of value, medium of exchange, standard of value, or display of power? What do you think it does? That's correct. Standard of value. Right? Which of these affects the demand for money? Real income, price level, rate of interest, both A and C. Yes, real income also affects, rate of interest also affects demand for money, right? Which of these would lead to fall in demand for money? Inflation, increase in real income, increase in real rate of interest, or increase in wealth? That's correct. Increase in real rate of interest. Supply of money refers to total money held by public, total money held by market, total money with all the commercial banks and RBI, or total money in the government bank account. So, supply of money refers to total money held by the public. Which is the apex bank for agriculture credit in India? RBI, SIDBI, NABARD, or IDBI? That's correct. NABARD is the apex bank for agriculture credit in India. RBI checks inflation by increasing bank rate, increasing CRR, both or none. Yes, it does both, increasing bank rate and increasing CRR. Now, if a country is passing through recession, RBI would buy bonds, reduce CRR, ease out bank rate, or all or any of the above three. Tell me. Yes, they can do all or any of the three. If they want, they can do it all together, like buying the bonds, reducing CRR, or ease out bank rate, or any of the three also they can choose. Okay. Yes. 1 second. Okay, yes, we are back. We are done with 60 questions of yours. Now, 60 around more, and then we'll be done with this video. Yeah. Manipulation in CRR enables the RBI to influence the lending ability of commercial banks, check unemployment growth, check poverty, or increase GDP. What do you think is the correct one? Yes, that's right. Influence the lending ability of commercial banks. Now, your CRR changes, the increase or decrease will affect the lending banks influence, or like influence the lending ability, how much they can lend and all. Exim Bank is authorized to raise loans from RBI, Government of India, international market, or trading activities. Yes, they can. They are authorized to raise loan from Government of India. RBI was nationalized in, very important question they can ask you in MCQ, June 1947, Jan 1949, March 1954, or April 1936. So you have to remember Jan 1949. FERA has been replaced by FINA, FEMA, FENA, or MRTP. Correct? FEMA is the new act that has replaced FERA. Now, repo transaction means sale of securities by the holder to investor with the agreement to purchase them at a predetermined rate and date, or sale of securities by holder to investor with the agreement to resale them at a predetermined rate and date. Sale and purchase of securities by the holder to the investor with the agreement to purchase them at a prevailing rate and date, or sale of securities by holder to investor with the agreement to purchase them at a market driven rate. So what do you think is the correct one? Yes, sale of securities by the holder to investor with the agreement to purchase them at a predetermined rate. Very good. Now, reverse repo rate transaction means sale of security by holder. Here it should be holder. I guess they have written wrong over here. Yes, by the holder to the investor with the agreement to purchase them at a predetermined rate and date. So that was repo rate. It can't be this one, right? Sale or purchase of securities by the holder to the investor with the commitment to sell or purchase them at a predetermined rate and date. Sale of purchase and securities by holder to the investor with the agreement to purchase them at a prevailing rate and date, or sale of securities by holder to investor with the agreement to purchase them at a market driven rate. So this seems like your reverse repo rate, right? Correct. Now, what they have said further, given a reverse ratio of 20% in the initial deposit of 1000 in a banking system would create secondary deposit of how much? Yes, calculate it and tell me. Very good, correct. It is going to create a secondary deposit of rupees 4000. Money market deals with short-term credit, long-term credit, both A and B, or none. Yes, money market will deal with short-term credit. Money is the fast-moving thing. Money market includes what? Government securities, treasury bills, bill of exchange, or all of the above. What do you think is the correct answer over here? Correct, all of the above it is going to include. In India, in Indian money market, who are the main borrowers of short-term funds? Central government, state government, local bodies. Yes, everyone is a main borrower of short-term funds. Money market is controlled by government, RBI, SBI, or all of the above. You guessed it right. RBI is the correct answer. In April 99, the government of India introduced the bills for the period of 91 days, 182 days, 364 days, or none. Yes, they introduced for 364 days. In call money market, funds are borrowed of rent without any security for the period of 1 day, 14 days, A and B. Yes, in money call and put options, 1 day things go. Now we have your next one. If buyer of goods is called drawer, drawee, payee, or none. Yes, that is drawee because they are drawing the goods, buying, right? Certificate of deposits are issued by the banks to individual companies, PSUs, or all of the above. Yes, they issue the certificate of deposit to everyone. Everyone will get, na? Everyone is depositing money, so they'll get it. Which are unsecured promissory notes? Commercial paper, certificate of deposit, treasury bills, or all of the above. Yes, commercial paper is your unsecured promissory note. Commercial banks provide collateral loans against bonds, government securities, A and B, both A and B, or none. Yes, commercial banks will provide you collateral against the bonds and government security both. Now, I hope we are clear till 77. Profit is the difference between total cost and total revenue, total revenue and total cost, both A and B, or none. So it is total revenue and total cost. See what they have done over here. Here you will get negative. That will be loss, cost minus revenue. So you have to read the words also very carefully. Okay. The internal business environment includes factors such as business philosophy and business priorities, management structure, capital structure, or all. It will include all of these. The term T in SWOT analysis stands for, you know it, comment down in the comment section. Transparency, total revenue, threat, or transaction. Correct? Threat. Components of micro business environment are firms and consumers, market competitors, market and competitors, organization, or all. These are all the components of micro business. Okay, firm and consumers, market and competitors, and organization. Everyone is a major component of micro business environment. Now, what they have said next, the term S in PASTEL stands for strength, socio-economic, sustainability, or none. Yes, that's correct, socio-economic. VUCA is an acronym first used in, when was it first used in? Yes, 1987. In PASTEL analysis, government policy, political stability or instability, corruption, foreign trade policy, tax policy, labor law policy, and trade restriction are related to what? All these are related to your political factors. Correct. Sorry, the pointer needs to be fixed. 1 second. Yes. So we have the pointer now. Political factors. Now, the W in the term SWOT analysis stands for, you know it very well. That is your weakness. Option number 4. So you have to see, this is a simple question they can ask you. SWOT analysis, PASTEL stands for, S stands for, P stands for. All this is very simple. You have to remember this. Bonus marks, you can say this is for you. Now, NCPI has been pivotal to the emergence of digital payment ecosystem in India. NCPI stands for what? National Payments Corporation of India. Option number 1. Very good. Now, who considered coordination as a permeating function of management passing through the managerial function of planning, organizing, staffing, leading, and controlling? Whose theory was it? Yes, I think you are getting the, sorry, we skipped one. Okay, which of the following is not a component of WCAFU? So what is not a component of WCAFU? Tell me. Uncertainty, ambiguity, clarity, or volatility. So clarity is not a function, not a component of WCAFU. Yeah. Who considered coordination as a permeating function of management passing through the managerial function of planning, organizing, staffing, leading, and controlling? George Terry and Theo Hyman, or Henry Fayol, or Hannes and Massey, or Hicks and Goulet? Tell me, what do you think is the correct answer for this? Yes, George Terry and Theo Hyman, sorry. Which is inherent in managerial job and embodied in all functions of management: planning, organizing, controlling, or coordination. Yes, you are right. Coordination is important in all, embodied in all functions of management. Now, according to Mary Pecker, Mary Pecker Follett, which one is not the principle for achieving effective coordination? What is not the principle for achieving effective coordination? So the options are continuity, early beginning, self-coordination, or managerial audit. Yes, managerial audit is the correct option. Who emphasized harmony of objectives and crucial to the success of direction? Direction, F.W. Taylor. Okay. A manager has to exhibit the style of leadership depending on performance, time, situation, or period. Yes, it is correct. Situation. As per the situation, the style of leadership will be dependent. Now, which of the following statement is not correct? Management is a goal-oriented process. Management is a universal process. Management is a continuous process. What they have said is not correct. Management is a rigid process. So that is right. Management is not a rigid process. It is goal-oriented. It is a universal process and a continuous one. Okay. Which of the following is not a function of managers? Designing, organizing, leading, or planning. What is not a function of them? Designing is not the function of managers. Which of the following does not corroborate the concept of management as a science? Cause and effect relationship, test of validity, personal skill, experimenting, sorry, experimentation, and observation. What do you think is not corroborating with the concept management as science? Cause and effect is going to give you that it is related to science. Test of validity that is done in science. Experiment and observation is the essence of science. So personal skill. Dash involves missions and objectives: organizing, planning, staffing, coordination. So dash involves missions and objectives. What is the mission and objective? Where it is done? It is done in planning, right? Planning stage of management. Management is the art and science of decision making and leadership. Who gave this definition? Tell me. Yes, that's right. Donald J. Clough. Agency theory suggests that managers, the agents, particularly those of large publicly owned firms, may have different objectives from those of workers, subordinate shareholders, or employees. Who will have a different one? Shareholders is the correct answer. Very good. The view that sees profit maximization as the main objective is known as shareholder theory, agency theory, stakeholder theory, or stewardship theory. Yes, that is stakeholders theory, because everyone is doing the business only for profit's sake, right? Except the NQs. 99 questions we have done very smoothly, and we are left with few of them. Which of the following represents the best effort to reduce the agency problem? Paying senior managers a cash bonus each year based on the number of people employed by the company. Giving senior managers bonuses consisting of shares of company share whenever the company improves its production efficiency. Increasing the salary of company president every time the company opens a new store. Or providing company cards to all managers employed by the firm for more than 1 year. So what do you think is the correct answer over here? Which of the following represents best effort to reduce agency problem? Yes, giving senior managers bonuses consisting of shares. So that is going to reduce your agency problems. Agency theory was developed by whom? Tell me. Yes, Alkane and Demsetz, Jensen and Meckling, and Jensen and Fama, all of them developed the agency theory. Yeah. Yes. So let's go ahead. I just wanted to confirm that all of them was the correct answer or not. Yeah. So let's go ahead. All of them had developed, like everyone was developing a theory on the agency theory. Okay. Now, next one. Who had said that leaders' stewardship choice can motivate and facilitate reciprocal stewardship behavior from the employee? Yes, that's right. Person and Mallory. According to Davis, Scorman and Donaldson, 1997, the managers, being a steward of the company, will try to protect and maximize dash through firm's performance. What? Shareholders' wealth, stakeholders' wealth, both A and B, or none of the above. They will always try to maximize the shareholders' wealth. Which of the following regarding residual loss is correct? Bonding costs do not have an effect on residual cost. Residual loss is incurred by the agent because an agency relationship exists. A reduction in residual loss is likely to be the result of an increase in monitoring cost. Under agency theory, residual loss can be reduced to zero by good governance. So what do you think is the correct answer over here? Yes, look into it. A reduction in your residual loss is likely to be the result of an increasing monetary cost. Okay. Which of the following regarding agency theory is correct? Agency theory only applies to large entities. Agents are assumed to be in a position of power. Agents act in the best interest of principal, or agency theory defines relationship between agents and directors. Yes, agents are assumed to be in a position of power. Okay. Which of the following is not an agency cost? Okay, 1 second. Yeah, right. That's correct. Option number 2. Which of the following is not an agency cost? Residual loss, bonding cost, concurrent loss, or monitoring cost. This is not an agency cost. Concurrent loss is not an agency cost. Dash is defined as the process of obtaining and maintaining the capable and competent people to fill all the positions from top to operative level. Staffing, you know it very well. Yes. Dash is concerned with providing the organization with the right number of people at the right place and at the right time so that the organization would be able to achieve its goal effectively. So that is again staffing. You have to read the definitions also. Staffing, recruitment, training, development, coordination, planning, etc. They'll ask you MCQs based on this. Right? Selection is a process of rejection, and hence it is called as a dash process. Positive, negative, or either A or B, or none. Negative process. T group training is also known as classroom training, apprenticeship training, internship training, or your sensitivity training. Yes, that is correct. Sensitivity training. Okay, I'm not able to mark this. It's option number 4. I'll write it somewhere over here. Right. Okay, this pen is not working. 1 second. Let me see if it works now. Okay, 1 second. Okay, let's see if it is working now. Sensitivity training. Yeah, option number 4. Training conducted away from actual work setting is called as on-the-job training, off-the-job training, step-by-step training, or job instruction. So on the job is where at work setting, but this is different away from it. So off-the-job training. Now, which of the following are the methods of off-the-job training? Tell me. Role playing, case studies, lectures, classroom, and instruction, or all of the above? Yes, you guessed it right. That is all of the above. External source of recruitment include employment exchanges, advertisements, employee walk-ins, all of the above. Yes, that's correct. All of the above. Yeah. Dash refers to introduction of a person to the job and organization. Induction, placement, orientation, or none of the above. Yes, correct. Induction. You might have heard this in your college system also. They also conduct the induction. Which activity brings the job seeker and employer in contact with one another? Recruitment, selection, induction, or placement. Recruitment is the process where one job seeker meets the employer. Who contends that training is an act of increasing the knowledge and skill of an employee for doing a particular job? Edwin Flippo, Michael J. Juices, O. Jeff Harris, or Andrew Carnegie? Yeah, tell me what is the correct answer. Right, Edwin Flippo, option number 1. Premises over which a firm has no control are known as controllable premises, semi-controllable, uncontrollable premises, or none of the above. You don't have the control, so that is undoubtedly uncontrollable premises. Right? I hope you were thorough with this particular MCQs. You have to watch this video once before your examination so that you'll be able to go through once all the MCQs before your exam, and some of the MCQs may be asked in your exam, and this will be very helpful. Staffing, planning, coordination, controlling, etc. Definitions you have to learn. SWOT analysis names you have to see. Pestle analysis names you have to see. The definition of socio-economic, political, your environmental, etc. All this you have to keep in mind. Okay, that will help you. Name of authors or theory inventors, developers is asked to you. Then other than this, they'll ask you some definitions like repo rate, reverse repo rate definitions they are asking you. Then years, they may ask you when was this nationalized, like RPI was nationalized in. And they ask you again who is the controlling authority. These type of questions they may ask you. Okay, definition based questions are also asked here. Price elasticity calculation questions are very minimum here, numerical are very minimum, but we never know what is going to be asked in the exam, so be prepared for that also. Okay, I hope you understood all the MCQs, like while we were solving you were able to recall all of them, and you get some benefit out of this session. Okay, I'll see you then. Thank you. All the very best for your examination.